it's all fine until it suddenly isn't. And what markets are looking at are exactly the positive factors, which is that you will get more money in your pocket, the government will spend more money on this and that. There are, of course, winners and losers. The companies that are favorable to Trump will get more money than the people who make solar panels, and I can go on. But the reality is all of these things have a cost. Tearing up alliances in international relationships is an extremely costly exercise. Introducing tariffs, a protectionist war, which is probably going to happen, is extremely costly. What are these costs? Well, the first cost is that inflation goes up, because essentially a tariff is a tax on your own consumers, who then have to pay for the tariff which is imposed upon foreign imports, but still want to get their mobile phones. So they pay the tax for the foreign producer, and the price of that item simply goes up. And that's number one, you get inflation. Number two, of course, is you get a massive budget deficit, which is going to add to the U.S. phenomenal growth in debt to GDP, which nobody even talked about during the election. And that is going to do one thing and bring it home to people, that it really is serious. It's going to put up interest rates. Now, it's going to put up interest rates in the bond yields first. In fact, you're starting to see it because the bond market will kind of suss this out and say, gosh, this is going to be hard to finance, so interest rates are going to go up. But then the Fed will have to reverse policy. Why? Because tariffs are increasing inflation, and because the budget deficit is fiscal stimulus, and the Fed can't be giving monetary stimulus out at the same time. When those things start to come home, then the economic costs of Trump will start to hit markets. It may take a couple of weeks, but probably much less than it did last time.
Is there a recession ahead then?
I would have thought so. I think there are a lot of ways in which macroeconomic and geopolitical uncertainty have become divorced from market volatility. The markets have learned that geopolitical volatility, macro policy uncertainty are simply blips, and then they go away. So the market has simply ignored them. I think the biggest change this time next year will be that volatility in markets and volatility and uncertainty in policy and in geopolitics will have actually connected. The divorced couple will get remarried again. And at that point in time, markets are going to become much more risky and losses will be much higher. And that feeds back into the economy through what? Through the big confidence factor. Once the world is uncertain and once it hits your pockets, you spend less.